Our two biggest themes are very different. One is the whole area of e-commerce and online shopping, which is growing very fast and which is a sort of retail revolution and which is particularly advanced in the UK. And then the other area which we think is of great interest is the whole area of financial companies and specifically banks and specifically in Europe. As the Eurozone economy recovers, we think there are some great opportunities there. For the e-commerce theme, which is our second largest theme, what we've done is we've tried to find companies that will benefit from this trend, this theme if you like, but which aren't perhaps the directly most obvious stocks. So we've gone very much for the logistics companies, where the increased numbers of parcels and deliveries will particularly help their business. And our example of that is Deutsche Post, which owns DHL, a household name. And as we see more and more of these couriers and vans rushing around to deliver the things we've clicked to try and buy, they're available at very modest prices compared to some of the more obvious companies, and so that's been our approach there. In the financials theme, it's more of a recovery of the banking sector, and particularly in regards to the European economy. We are now 5 or 6 years into the sort of post-crisis environment. An awful lot of restructuring and recapitalization has taken place. And there's a sort of still a very large amount of skepticism about these businesses, but they are available at extraordinarily low prices. The valuations of many of the banks in our financials theme are well below tangible book value, which is a level that hasn't been seen for many decades. And the last time when this was a sort of more general opportunity was 20 years ago. Like all things, it's a compromise. I mean, the whole point of a theme is to make sure that you try and participate in a part of the economy that's growing. So from our point of view, the themes are trying to capture those bits of economic activity which are expanding. And so that is a sort of backdrop. And then, of course, we have to zero in on the more specific individual companies and try and get the right relationship between valuation and potential reward. I think there are very few unrecognized themes, but there are quite a lot of unpopular themes. And over the last few years, for very obvious reasons, the whole financial services sector, in particular banks, has been very unpopular. And we think that as the problems that were built up now 5 or 6 years ago, as they are gradually resolved, investors will return to looking at the banking sector. The valuations are extraordinarily low, and once they clean up their balance sheets and as the economy starts to grow again, banks perform a very important function in the economy and are at multi-decade lows in terms of valuation. And we have a substantial holding in the Royal Bank of Scotland, which trades at a big discount to tangible book value, which hasn't been seen for a very long time. If you look back to previous banking crises elsewhere, if you invested in either some of the Scandinavian banks 20 years ago or Citigroup at the beginning of the 1990s, when they'd had a debt crisis or a banking crisis, housing crisis there, then the returns over the following years were very good, and we think there's an opportunity to do very well out of the UK banks over the next 3 to 5 years. Well, we're equity investors, and so I suppose you would suspect us of talking our book if we say that equities are undervalued. We think that they are. We think that the multiples of earnings are modest. We think that particularly in Europe, we think that the Profit margins of companies are subdued. We think the European economy has been badly rattled by the difficulties of the last few years, so we think equities are particularly good value, and particularly in Europe. We think that there are some areas of overvaluation, probably in those parts of the financial markets which were seen as safe havens. Probably the fixed income markets are the biggest candidates there. As interest rates return to more normal levels, then the cost of that governments in particular will have to pay to borrow money may rise a little, but we think that is the sort of greatest area of risk.